Yes, welcome. In the last class, we talked about the different single candlestick patterns, and I said that in the next class, I'm going to talk about candlestick patterns that are double or triple. I said I'm going to talk about how to combine different candlestick patterns to be able to get signals to trade. That is to know when to enter, when to leave the market. So in this particular video, I'm going to be explaining the different multiple candlestick patterns we have and how to use them to make profit while trading. And the first one we have here is bullish engulfing. We have the bearish engulfing. We have tweezer tops. We have tweezer bottom. We have morning star. We have evening star. We have bullish rejection. We have bearish rejection. So I'm going to be explaining each of them one by one, even as we move forward. So the first pattern we have is the bullish engulfing. The bullish engulfing. Now, this is how the bullish engulfing. This is how the bullish engulfing looks like. First of all, you notice that there is a bearish. That is a sell candle, a bearish candle, right? Like this. And if you notice, the pattern here is Haramis. Then after the bearish pattern, we have a big bullish candle that covers it. Engulfing means bullish engulfing means the bullish candle engulfs, or another language for engulfs is covers. So if you notice in this place here, you notice that this bullish candle here, which is this one, engulfs, covers this one. That means this is a buy pattern. Anywhere you notice or detect this pattern, especially when the market has sold for some time, you now notice that this pattern forms immediately. It's giving you a signal that the market is in a buy trend, that you should open a trade and enter immediately. So unlike when I said that we have single patterns, this one is a sure confirmation that the trend is changing. You understand? So this is the language this bullish engulfing is saying. So now what qualifies this pattern to be a bullish engulfing? First of all, the market must be in a clearly defined downtrend. As you can see in this example here, see this pattern downtrend, right? So the first candle is bearish, which is this one. Then the second candle is bullish, which is this one. Then the bullish candle engulfs the previous candle. Engulfs means it covers it fully, just like we can see here, it covers it fully. So the bullish engulfing pattern is an important bottom reversal signal. It means once you notice a bullish engulfing in a downtrend, when the market has sold for some time and you notice a bullish engulfing, it's telling you that you should buy the market immediately. That's just what bullish engulfing means. Let us go to our MetaTrader app and look for bullish engulfing examples to make our explanation better. Okay, now this is EURUSD. This is a clear example of a bullish engulfing. Why? This is a bearish candle and this is a bullish candle, and this bullish candle completely covers the bearish candle, right? Making it a bullish what? Bullish engulfing. Let's check for another one. Another bullish engulfing. Another bullish engulfing pattern. This is also a bullish engulfing, right? This is a bullish engulfing. This one here, the body, it covers the bullish body covers the bearish body. I noticed that after this pattern formed, although it did not go up immediately, although another candle formed, it didn't take much time. The market bought, started going up, telling us that this bullish engulfing signal is at play. So let's check for another bullish engulfing. Another bullish engulfing pattern. See another bullish engulfing pattern here. After this pattern, it bought. You understand? Bullish engulfing. Okay. And that bullish engulfing pattern. Another bullish engulfing pattern. And that bullish engulfing pattern. Remember, it must be in a clearly defined downtrend, right? Clearly defined downtrend. Market must be selling first before we can enter. Bullish engulfing. bullish engulfing pattern. I'm going to explain these ones that we are seeing. You see the bearish candle is bigger than the bullish candle. We call it inside bar pattern, but I'm going to explain it with time. So let's check for one more bullish engulfing pattern. Yeah, then see another bullish engulfing pattern here. This one, bullish engulfing, he bought, right? Let's check for the last one, and I'll explain bearish engulfing pattern. Bullish. Let's check for bullish engulfing pattern. Okay, this is on that one. The market was in the downtrend, although this pattern here came into play. This inside bar pattern, which I said I will explain, came into play in this place first. Okay, this is another bullish engulfing pattern. So that's just it for bullish engulfing pattern. Once you notice that the market is in a downtrend and you notice a bullish engulfing pattern, what it's telling you is that when in a downtrend and you notice a bullish engulfing pattern, right? It's telling you that it's time for you to buy. The market will soon go up. So like I've been saying before, all you just need to do is to pick a point above as your take profit, depending on your risk appetite and how much is your target in the market. Then you pick a point below where the engulfing happened as your stop loss, right? And enter the market. That's just it for bullish engulfing. So the next one we're going to talk about is bearish engulfing. The next pattern I'm going to talk about is bearish engulfing pattern. Now, the bearish engulfing pattern is the direct opposite of the bullish engulfing pattern. Now, what qualifies the candle to be a bearish engulfing pattern? Now, what it means is that there is a bullish candle, right? A bullish candle, then there is a bigger candle, a bearish candle that engulfs the bullish candle, right? So now we can say that this candle, which is this one, which is the bearish candle, right, is engulfing the bullish candle, covers the bullish candles completely, meaning that the bears are in control. Now, it said what qualifies the candle as bearish engulfing? First of all, the market must have been buying, must have been an uptrend. That's the first. Then when you cite it, the bearish candle, like in this case here, the bearish candle covers the bullish candle, indicating that it's a bearish engulfing pattern. First thing is that it is an uptrend. Second thing is that the bearish candle engulfs the bullish candle. And if you notice from this example, immediately the bearish candle engulfs the bullish candle, the market started going down, telling us that the signal is already at play. You understand? That's what's the main thing about bearish engulfing pattern. So let's check in our MetaTrader app for some other examples. Like I said, see bearish here. Market will be in an uptrend. First of all, the bearish candle engulfs the bullish candle, right? The first candle is bullish, second candle is bearish, right? So let's go to our MetaTrader app and look for practical examples to make our explanation easier. Okay, let's look for bearish engulfing patterns. Bearish engulfing patterns. First of all, it must be in an uptrend first. Then after an uptrend, a candle. This is a bearish engulfing pattern here. This one, but it did not sell down for long. Like the first thing I said, that you need to consider it to be in an uptrend. It was in an uptrend, which is check. This bearish candle engulfs the bullish candle, check, but it didn't go down for a long time. Let me look for another better example. See this one, the bearish candle engulfs the bullish candle, but it didn't go down for a long time, although it later went back up here and still came down. and still sold. So we can say that this one is valid, because if you have placed your stop loss maybe at a point above the pattern and place your take profit down, you will still make your profit. So this pattern is valid. First of all, it must be in an uptrend, which is correct. Second of all, the bearish candle must engulf the bullish candle, which is correct. Check. So this is another bearish engulfing pattern. Let's check for another bearish engulfing pattern. Let's look for like 3 or 4 more, so I will understand better how these patterns work. Okay, I'll say a perfect one here. First of all, it must be an uptrend, correct, right? Second of all, the bearish candle must engulf the bullish candle. Bearish candle engulf bullish candle, correct, right? So and you notice that immediately this thing happened, the market went down, you made your profit. Let's check for the last bearish engulfing pattern. This is a bearish engulfing pattern, but we can't make use of this because this is clearly not an uptrend. The market is falling down. So this thing that happened here is what we call a retracement. Retracement is, let's say the market is going up, the trend the market is up, but in forex market does not keep on going up. It will go up, come down, go up, come down, go up. We call those down or movements that is not part of the main movement, we call them retracements. You understand? So let's check for more bearish engulfing patterns. Bearish engulfing patterns, right? Bearish engulfing patterns. Inside bar patterns are also very powerful patterns. I will explain them. Inside bar, see how powerful it is here. Immediately happened, markets went in the direction, right? Okay, let's check for this is another example of a bearish engulfing. Uptrend, check. Then this pattern engulfs this, but this one in this case it didn't go down. It didn't go down. It kept on ranging. Right? Okay, here I see another perfect example. Event market was in the uptrend. It was buying, correct. Then the bearish candle engulfed the bullish candle, correct, and market went down at some time. So um, that is just it about bearish engulfing. So I've explained bullish engulfing, I've explained bearish engulfing, and how to make use of them, right? So the next pattern I'm going to talk about is tweezer top and tweezer bottom. Tweezer top and tweezer bottom candlestick pattern. Now, if you notice this pattern now, tweezer top and tweezer bottom is another kind of reversal pattern, right? Now see how they look like. For tweezer top, there's no wick up. There's no wick up like this. This is how they look. There's no wick up here. No wick. No wick up. No wick up. For tweezer top. And for tweezer bottom, they look like this. There's wick up, but there's no wick down. That's how they look. So when you see a tweezer top said it's another reversal candlestick pattern. They are two identical candles matching each other, right? When you notice tweezer top, they're usually found in an uptrend. The same way you find bullish engulfing, that's the same way you find tweezer tops. Now, when you notice a tweezer top, it is telling you that the market will soon change direction into a downtrend. If you look at this example in this tweezer top here, you notice that the first candle is a bullish candle for tweezer top, right? While the next candle is a bearish candle, indicating that once you notice something like this, the market it will soon change direction to a bearish market. So now tweezer top is a bearish signal. You understand? So let me change this color to red. So if the market is buying now and you notice something like this now, this, right, this is this is this is our bullish candle. then the next candle is something like this, bearish candle. It's giving this a signal that market will soon change direction to a downtrend. And if you notice this thing, this tweezer top, another name for tweezer top is an inside bar pattern. I said I will explain this pattern here. If you look at this example here, the first is a bullish candle, the second one is a bearish candle. Although the first candle is bigger in size than the second candle, this is another name for inside bar pattern. Inside bar pattern. Inside bar pattern. Inside bar pattern. Right? So now what it means is that let's go back to our MetaTrader app. Let me show you perfect examples of inside bar pattern. Right? So now see this. The first candle is a bullish candle, which is this. Second candle is a bearish candle, which is this, and the first candle is bigger in size than the second one. This is what we call tweezer top or inside bar pattern. See another example of tweezer top or inside bar pattern. First thing is that the market must be in an uptrend for tweezer top, then a big bullish candle, then the next one is a bearish candle. And notice how immediately the market went down. So that's just how the thing is. The whole thing is just simple. You just need to understand how it works. Alright. So now let's look for more tweezer here. See this one. This is a tweezer bottom. First one is a big bearish candle. Second one is a small bullish candle, and the market goes up like that. So let me look for one more tweezer top. See more examples. Tweezer top, right? Tweezer top. See another example of tweezer top. Yeah. Another example of tweezer top candle pattern. Tweezer top. And this is a tweezer bottom. Let me explain the tweezer bottom here. Then if you check come on, just went back. Okay. And if you check for the tweezer bottom, it's just the same thing, or the reverse. The first candle is always a bullish candle. Tweezer bottom, the first candle is a bullish candle, second candle is a bearish candle, right? Sorry, the first candle is a bearish candle here, second candle is a bullish candle, like this, telling you that it is the market is about to change to an uptrend. So this is, look at the example I said here, right? See one example. In this case, they have similar shape, this similar size, right? But it's not always the case. This is tweezer top, identical in size, identical in shape. You understand? So they can't do one thing you need to understand is that there's the first candle, right? The second candle is the most important one. The candle that forms the second is the one that indicates that the market indicates the direction of the market. So if, like for bullish and bearish engulfing, the bullish candle engulfs the bearish candle, right, telling you that we're going to sell. For tweezer top, the bearish candle right, bearish candle is engulfed by the first one, right, or sometimes the same size. So the main one you need to focus on the second candle. Now see I've seen these examples. Let me go back to this, and let's look for tweezer bottom patterns. We have done tweezer tops. Let's check for tweezer bottom. First of all, it must be a downtrend. Since it's tweezer bottom, a downtrend, then a big bearish candle, then a small bullish candle, which can fit perfectly inside the first candle, which is the bearish candle. This example here, this bearish candle, bullish candle, inside bar pattern, inside bar pattern, inside bar pattern, or inside bar pattern, or Tweezer Bottom or Tweezer Bottom, Tweezer Bottom, right? So now this is a perfect example. The market went down, formed this pattern, and most of the market change direction to an uptrend. So let's check for another example of a Tweezer Bottom. See a perfect example here. Different Tweezer Bottoms happen around here, but let's pick this. Immediately after this pattern formed, market change direction to a buy, right? Okay, first thing first, this is another Tweezer Bottom. Market went, although this one was a small downtrend before it went up, but this is also a Tweezer Bottom. This is a Tweezer Bottom, a Tweezer Bottom. Market went down, right? Formed this pattern. It formed a Tweezer Bottom. It formed a Bullish Engulfing. That's in this pattern. There are so many patterns here. I talked about hammer in our previous classes when I said that a hammer market must be in the downtrend. Then when you notice a hammer, irrespective of the color, it's giving you a signal that the market will soon change direction, right? I explained that. So now in this particular instance, we have signal of a hammer, one. We have inverted hammer in a downtrend, which is this one, two. We have this pattern, this big bearish candle, and this inverted hammer is acting as an inside bar pattern, three, right? Three. Then this these two candles, this one and this one, the bullish candles engulfing the inverted hammer, is acting as another signal. So in this case, we have four things giving us confirmation. So this is a very powerful signal to buy. You understand? And it went up. So that's just it for tweezer top, tweezer bottom, inverted hammer. Sorry, tweezer top, tweezer bottom, bullish engulfing, bearish engulfing. So there's nothing really hard about the whole thing. In the next class, I'm going to explain about morning star, evening star. I think let me go back to this. In the next class, we're going to talk about morning star, evening star, bullish rejection, bearish rejection, three white soldiers and three black crows. Thank you for your time.